Let's stick with the oil markets now and bring in Regina Mayor, KPMG's global head of energy. Regina, thanks for being with us. What do you make of OPEC Plus's decision yesterday to boost output in the face of increased demand as we continue to emerge from the pandemic?
Well, I think OPEC Plus has demonstrated remarkable restraint to continue to make moves that boost oil price overall. The demand signals are incredibly bullish. You just ran through all of the increases in demand. Gasoline demand in the U.S. is up 7.2% just in the last week alone. The TSA crossings are close to 2 million, near pre-pandemic levels. And we do realize that the supply overhangs have largely been worked through. I think also the market is less worried about the pending bringing back of the 1.5 million barrels per day of Iranian crude that's still subject to U.S. sanctions. But there is an anticipation that that will come back into the market by the end of 2021. I continue to be quite bullish about price. I think WTI will go north of 70. I think Brent could get into the high 70s. And I think there's upward momentum. And I do believe that OPEC Plus will continue to just slowly trickle back crude into the marketplace because they do want to create these sustained price levels that they're seeing now.
Okay, so if crude is going to sort of comfortably hang out above $70 a barrel, let's talk about what that means for the everyday American. And I'm talking about the gas pump, because we saw gas prices rise to a 7-year high over Memorial Day weekend as all that pent up demand, right? People hit the roads and went to the gas stations. How much of that jump in gas was because of the hack on the Colonial Pipeline and not all of that oil yet coming back online?
I don't think they're necessarily directly correlated, Alexis, but what you said is exactly right, that gas prices are going to continue to jump because everyone wants more gasoline. And to be honest, the refiners haven't been producing a lot of gasoline. Why would they when it would just sit around in barrels and not have any place to go? So we're seeing refinery utilization get back up. I think it was 85% just in the last week alone. In pre-pandemic levels, it was 95+%. So we'll continue to see the manufacturing component pick up. And then we also have the cost of goods sold, right? The inbound part of the crude price having an impact on what that gasoline price will ultimately be. I think gasoline prices will be quite hefty in the $3 plus range over the summer because we are anticipating a very strong summer driving season that will continue to affect the American public.
Yeah, I think the average over the weekend, the holiday weekend, the national average was something like 3.05. How much more above $3 a gallon do you think we're going to get this year?
Maybe another 10% at the highest level. I mean, it's still a very competitive environment. I think that there's a lot of refined product capacity that hasn't been tapped into, and our refiners have done a great job of figuring out how to produce more gasoline with less, even in a higher crude price environment. So refining margins aren't positive, and the benefit to the crude price is going to the upstream folks, the producers. We're not seeing that trickle down yet into the downstream. But overall, the industry is quite optimistic. KPMG ran a CEO Outlook survey, and our Pulse survey for energy showed that 93% of our energy company CEOs are very optimistic about their own company's prospects for growth in the next 3 years.
All right, Regina Mayor, KPMG's global head of energy. Thanks so much for being with us.